Before we start today's show, I just wanted to mention our sponsor, Wealthify. Now, Wealthify is regulated by the FCA and is a multi-award winning online and app-based investment service, which was founded in 2016 and owned by Aviva, with a simple mission to make investing accessible to everyone. You can invest from as little as £1. Wealthify offers a number of investment products, including a stocks and shares ISA, a general investment account, and a personal pension. However, Wealthify also offers a junior ISA, which allows parents to save for their child's future through investing. Wealthify also offers ethical junior ISAs and the ability for family and friends to pay directly into its junior ISA accounts for the child's benefit. In the run-up to Christmas, this could provide a meaningful and eco-friendly alternative to present buying. With investing, your capital is at risk and you could get back less than you put in. For more information, head to moneytothemasses.com and search Wealthify.
Hello and welcome to episode 347 of the Money to the Masses podcast with your resident expert, as always, Damien Fay and me, Andy Leaks. Damien, welcome back. How are we doing?
I'm good, Andy. I'm quite pumped for this week. Something different we're doing, and it's great to have Jordan Cox back on the show. So long-time followers of the Money to the Masses podcast will have heard of Jordan, who is the UK's coupon kid, who will be coming on the show to talk about Black Friday. So Black Friday, I'm not the biggest fan. We'll talk about it more in that particular section, but he's come on to basically hack it and find decent deals and tell you how to do it. So I always enjoy listening to Jordan and his expertise because there's nobody better, quite frankly, at deal hunting. So I'm excited about that. And I'm also still hammering Insta stories. I mentioned last week on the podcast, I'm getting a mild addiction to Insta stories, which is probably to the detriment to other things. But I'm doing a lot on Instagram stories at the moment, sort of behind the scenes, extra tips and guidance and all sorts of things, which I think is gaining a lot of traction. It allows me to be a bit more creative in terms of some of the visual stuff we produce. So that's also exciting.
Now let's get. I'm looking forward to it too. I always like chatting to Jordan as you do. The only thing on my side is I'm not looking forward to is the fact that it's going to affect my bank balance, because I fall for it every year. Black Friday is my nemesis.
You are easily swayed. I have to say that. I mean, I convinced you to come to Money to the Masses. You're an easily led individual, aren't you?
Yeah, I mean, I'm not quite sure how to take it, but I'll take it as a compliment.
I'm not sure it was or wasn't. On this week's show, right, so we've got Jordan, but I'm doing two other pieces. The debt piece from last week, escaping car payments, was very well received. And actually, one thing just to point out on that I didn't mention that, of course, if the car payment savings that you make, you could always use that to overpay your mortgage. So nice interaction on social media around that topic. And somebody said, oh, you could also do that, which of course is true. But I'm doing a quick piece on debt this week, which is relating to credit cards versus loans. Now, there was something that I saw as a bit of unconventional wisdom, and it was something that was quite an interesting view on whether you should take out a loan versus a credit card that I wanted to explore. And I also wanted to talk about, it's on the sort of theme of Black Friday, but more to do with financial products. And it's to try and stop people being swayed by marketing. And really it's about the psychology of what people who make some of these products and services want you to do and what they're trying to get you to do. And actually, I'm going to try and counter that so you don't end up buying financial products and services you don't really need.
That sounds like that piece is right up my street after what I said about Black Friday. Okay, so let's start with the first piece of the podcast then. And we're going to be welcoming Britain's Coupon Kid. That is Jordan Cox. And he's been doing a lot of stuff for us on the site in regard to deals, and he's been doing that for a few months now. But of course, the reason we're releasing this podcast early and the reason we're here today is it's Black Friday. And of course, we've got Cyber Monday coming up as well. So Jordan, thank you so much for coming on to this week's almost special episode. How are you doing?
I'm doing well. How are you? Ready for deals?
Well, actually, I should bring Damien in on at this point because Damien and I were chatting as well. Damien, you're not a massive fan of Black Friday, really, are you?
I'll be honest with you, no. I don't tend to engage with Black Friday massively because the issue, there was a piece of research, which I dare say Jordan will tell us a bit more about, that came about earlier in the week by Wits that showed that most deals are actually not true deals, almost fake on Black Friday, as in you could have got a better deal at another time of the year. I think for me, there are people out there who may be tempted to buy things they didn't need for that sort of fear of missing out. And so that part I don't like. But let's be honest, I like a deal just as much as the next person, but I'm just too lazy to go and look at it and do the research required. And I don't have that time, inclination or skill set, which is all the things that Jordan has. And if anybody remembers our live event, we did a questionnaire after our live event, which was just before the pandemic. And the live event we did in London was a big success. It was how to have a champagne lifestyle on a lemonade budget. And we asked people what they loved about the event and what they didn't. And funny enough, one of the things that came up that people liked the most about the event was Jordan, which we didn't ask him which person, but yeah. So I don't know if we ever told you that, Jordan, but that was some feedback we got. So what's your view on Black Friday then, Jordan, as the nation's coupon kid? Do you like it? Do you not?
From a top line perspective, yes, I like it because it's a day of deals. It's where a lot of things are discounted. That's sort of my remit. I really liked the Black Friday of old. So like the 2013, 2014, obviously not the punching up in shops over a TV. I didn't like that part. But the deals back in the day were so much better than they are now. They've just been getting worse and worse over each year. And it's got to a point now, like you said earlier, there was a Which article that said 99.5% of all Black Friday deals have been either cheaper or the same price at other times of the year. So there are still deals out there this Black Friday, but they're not groundbreaking, earth-shattering deals which are the cheapest that they've ever been. And that's what Black Friday used to be. And now it's just sort of falling more into that marketing trap of just trying to sell your products before Christmas.
But there are deals out there, like you said. So what we decided we'd do with Jordan was the basically hack Black Friday. So obviously he's got tips about what he does. And we have been doing a lot on Instagram stories ahead of this week, and we've been asking people what do they want from Black Friday. So if you want to buy your child a Nintendo Switch for Christmas, then we're just putting it out there for Jordan to go and find the best deals. So basically, I don't want to go look at stuff for Black Friday. I want to know if there is a good deal or not, and if it is, where it is, and then I might take advantage of it. It's like the ultimate way to navigate Black Friday. So Jordan is the best person for that. So this podcast is being released ahead of time. Normally we do Sunday morning. It's been done Friday as of midnight. So Friday morning, because there are embargo deals that get released, which he couldn't talk about ahead of time. And if we don't talk about them and have released a podcast on Friday, then they basically will be null and void by the time we probably get to Sunday. So, Jordan, I'm going to just hand over to you to talk about Black Friday.
So to start with, I would say to everyone basically what you've said earlier, which is you need to make sure that you're doing price comparisons. You need to be checking prices. And I know that you're not very keen on that, Damien, but if you do want to get the cheapest deal on Black Friday, you're going to need to do a little bit of research. And people should have been looking at prices sort of at the start of this week, the week before, to see what sort of prices they are now and if they actually drop on Black Friday. Obviously, most of the time they either don't, and retailers are now doing deals starting, months, weeks in advance for Black Friday itself. So quite a lot of retailers, the deals they're doing on Black Friday have been the same for the past few weeks. My tips for you, if you want to get a deal on something on Black Friday, obviously, do a price comparison before you buy that item. So just because you go to, Amazon, don't believe that that's the cheapest place, because retailers will be fighting each other on the day for the cheapest slot. So there might be a price drop and you don't know about it. So just have a look on sort of your John Lewis's, go onto Google Shopping and just sort of type in the item that you want and see if you can get it for cheaper. And see if you can get any extra discounts as well. So there's plenty of cashback websites. There's loads of voucher codes out there. So if you see a deal at an online retailer, for example, just have a look around for a code. Go on to sort of Top Cashback or Quidco. There are apps on your phone like Airtime Rewards, which give you extra cashback on top. So you can actually save money on the Black Friday deals by getting even more money off. And in terms of the actual deals which are coming around this Black Friday, there's nothing really absolutely stonking amazing. There's the cheapest prices on things like the Amazon Echo Dots and the Amazon Fire TV sticks. One of the best ones I've seen is an Amazon Echo Dot 3rd Gen with a Fire TV stick bundle for $29.98, and that's on Amazon. So it works out about £15 for each one, which is quite a good deal. And there are so many other deals that look really good, but perhaps they're not under the surface. Like at Boohoo, there's up to 99% off of their clothes, which sounds great, right? But there's only maybe a couple of items on there which are 99% off. And one of them's a beanie, which is now 8p, which is sold out. So some of these deals, they look great from the surface, but once you actually dig in, it's not really that great. Damien, I want to ask you, what sort of things are you looking for? What if you had to buy some things for Black Friday for Christmas, what things would you want?
Well, I'll tell you what I will answer in case my kids listen to this podcast, because I don't want to give away their Christmas presents. Actually, I can tell you my kids don't listen to the podcast. But I think it would be things like a Nintendo Switch is one of the most popular things we put out on our social channels to ask people what they wanted to get you to look at. And one of them is Nintendo Switch. There were things like Lego was another one, for example. And I suppose one of the main ones is Apple products. So things like AirPods.
So if you want to find a Switch, now's probably quite a good time for it, because in Morrison's, if you go into store, you can get one for £230. That's the console only. And Tesco's are doing a Nintendo Switch bundle, which includes a Mario Kart game and like the online subscription, which is $239, and that's with the club card pricing at Tesco. Now, both of those are in store. So if people don't want to go out for Black Friday, the Switches are going to actually be more expensive online, which is quite a shock. Black Friday recently has actually been moving more online, so the deals are better online than they are in store. But at the moment, the cheapest place that you can get them is £259 at Curry's for a Nintendo Switch bundle. Obviously, prices can change, and I expect them to change on Black Friday, but the cheapest Switch bundles are at sort of Morrison's and Tesco's at the moment. And in terms of Apple products, they don't really offer discounts throughout the year. So Black Friday is one of the times that you can get discounts on Apple products. It's not going to be a massive amount, but you can get them. For example, if you wanted some AirTags at the moment, the cheapest place you can get them is Appliances Direct for a pack of 4, and that's $79.99, so that's £20 each, and they're normally about £29 each. So not massive changes. And you can also get an Apple MacBook Air at the moment. The 2020 with the M1 chip is currently at £839 at Costco, which is quite a good price. But then you have to be a Costco member. And in terms of actual other Apple products, Apple always do the same deal every year for Black Friday. They offer you a gift card to spend on other Apple products or in the App Store when you buy through Apple's website. So if you're buying a phone, if you're buying AirPods, if you're buying an iPad, laptop, you can get anywhere between a £40 to £160 gift card on there. So it's not going to be huge, but you can start to save a little bit of money on Apple stuff.
One thing to point out to listeners before we carry on is Jordan has got a page on our website which we'll link to in the show notes. I won't read the URL, but we link to it in the show notes. If you search on the homepage for Black Friday, then Jordan has got a page that he's updating continually all through Black Friday. And in fact, Jordan is coming to the office on Friday morning, and he's going to be doing a whole load of stuff, takeovers on our Instagram lives, where he's looking at deals throughout the day as they come in. You mentioned a tip earlier on to keep looking through the day. Jordan's going to do that, so you don't have to. So do follow us on Instagram. Look at our stories, Instagram Live, so you can see those deals. As I say, the page is on our website that's being continually updated. And the other thing to throw out there, this is Cyber Monday as well. It's not just Black Friday. We're talking Black Friday at the moment, but this is updated for Cyber Monday, which is basically the text version of Black Friday on Monday coming. One thing I have to say to you, Jordan, you mentioned about getting cash back and money off. I got nearly £200 off of a Sonos Beam 2, in the last week because of you. And it wasn't because of a deal. It was because of an article you wrote for us a couple of months ago about converting Avios points into Nectar points. And I had a whole bunch of, thousands of Avios points I collected over the years that were about to expire because I wasn't doing anything with them. They actually do expire after, I think it's 3 years if you don't do anything. With COVID, I'm not traveling or doing anything at all. And so I converted them to Nectar points. It's quite a generous conversion, I think, to be honest with you. And then I use those to buy the electrical goods that I wanted via Argos. I mean, it's not a plug, it's just that they are one of the retailers. And because things like Sonos don't often do offers, the price was the same as I'd pay anywhere else anyway. And I just got it £200 off. So anybody out there, do remember that you can convert your Avios points if you have them into Nectar points and then use them on retailers. And I did that online. I bought it online. I then collected it in store. So slightly off-piste, but you can make good savings by just converting things like your Avios points.
That's fantastic. And yeah, things, if you do shop through Top Cashback and Quidco, for example, you can get gift cards for different retailers as well. So you can use that obviously on top of the deals. And that's one of the things about this Black Friday, which I'm seeing more and more of, is the stacking. So getting a deal on top of another deal. So for example, the Argos toy sale this year is up to 50% off. And then there's another 20% off code if you use the code TOYS20. So things like that, you can really start to make some savings if you add them up.
So that's where you want to get your Lego from that I mentioned earlier on. Now, moving on from things that people would typically look for on Black Friday, like the AirPods, is there anything that is not typical for what people will be looking for on a Black Friday, but are actually decent deals?
So there are always different travel deals around on Black Friday. So your Ryanairs, your Virgins, your British Airways are always competing on price. So you can actually get some cheaper holidays, some cheaper flights on Black Friday if you had a look around. For example, Ryanair are doing flights for £5 each way, which is pretty good. So you can get somewhere in Europe, return for £10. Obviously, with this stuff this year, it's going to be very different. Well, it was the same last year, where we don't really know what the status is of whether we can travel. But obviously, if you're booking with Ryanair for £5, then there's a little bit less risk than spending thousands on a British Airways or Virgin Atlantic holiday, and you're not really sure if you can go. But there are some other deals that you might not think about as well, on like broadband or mobile phone bills. I always change my mobile phone contract on Black Friday because it typically is the cheapest time for you to actually get a good deal on your phone contract. And at the moment, you can get, with O2, you can get a 15 gigabyte SIM-only plan for £8 a month, which is pretty good. And there's also another one with 3 as well, which gets you unlimited. And you can actually get £120 cashback if you shop through Top Cashback as well. So it works out as £8 a month as well for an unlimited plan. So there are some other deals on things that perhaps you might not think about. And for me, by far the best deal that I have seen this Black Friday, and this sort of shows you about how sort of meh this Black Friday is you can get a 75p Terry's Chocolate Orange, which for me is like the best thing I've seen this whole Black Friday, and that's in store at Morrison's. So it's another in-store deal.
So you go to Morrison's, you can get your Terry's chocolate and your
Nintendo Switch.
Nintendo Switch. But I just, that sounds a great deal. But I can't stand chocolate. I really don't like chocolate. It makes me feel ill. So I won't be buying a Terry's Orange for 75p. I think that would be money well spent.
It's a good job that, Damien, this is an audio medium, because I am just shaking my head in disgust at you. I have to say that chocolate is right up there with one of life's absolute luxuries. I couldn't do without chocolate. I eat chocolate every day.
Couldn't agree more.
So to wrap this section up, Jordan, for anybody listening, do stay with us on Friday on our social channels, principally on Instagram. Can you throw out some deals for us? You can just finish with a flurry of deals that people should have a look at if they're interested.
Sure. So there are some good deals from certain retailers if you need to shop there. So, for example, Halfords, if you spend over £50 on Black Friday, you can get a £10 voucher, which has no minimum spend. So the next time you go into a Halfords, you can get £10 off whatever you want. If you want a rail card, if you want like a 16 to 25, 26 to 30, you can get 50% off rail cards at the moment via the app if you use the code RailCard50, which is actually quite a good deal because it gets you a third off travel nationwide. If you're a H&M shopper, you can get 20% off H&M on Black Friday. There's up to 80% off ASOS. There's up to 70% off Nike. So there is quite a lot of stuff out there for clothes, for electronics. If you want it, then have a look to see what sort of pricing it is. You can go on to price comparison websites like Camel, which is Amazon's version of like a price graph. And if you type in the item that you want to buy, it will show you what pricing it's been over the past 6 months, a year. So you can see if it's a good deal now. And just make sure you have a look for deals and discounts where you can, because there are some to be had on Black Friday if you want to do your Christmas shopping.
Thank you for coming on the show, Jordan. For anybody who listens to this show, don't forget that Jordan does a daily Money to the Masses deal. He puts a deal on our deals page that exists. I don't think we've ever really promoted it enough, but we have a deals page, which we'll link to in the show notes. You can find it from the homepage of the Money to the Masses website. If you go up to the top, there's a link that says deals. Every day, Jordan puts a deal on there, his best one, on a range of different things, and he'll continue to do that beyond Black Friday and Cyber Monday. So do make sure you bookmark that and check that out every day. And of course, we do share it on our social channels. So Jordan, until the next time we can have you on the pod, and I am obviously looking forward to Friday and you being in the office and doing a bit of a social media takeover.
Thank you so much for having me on. And probably my last quick tip, make sure you keep a strict list. Don't get sucked into the Black Friday hype, because obviously, as we've said, there are some deals out there which perhaps aren't the best. So if there are some stuff that you do need, make sure you keep to a list, and then hopefully we can all save some money.
Okay, so moving on to the next part of the podcast, and this kind of follows on from last week from what you were talking about, Damien, in terms of debt. You're going to cover a couple of things around debt, and particularly looking at credit cards versus loans, and perhaps what might be better for people in different situations. Damien, what have we got on this?
So the first thing I want to point out is, if anybody listening to the podcast is having problems with debt, unable to keep up their payments, then do get in touch with somebody like Step Change, which is a debt charity that can help you overcome your debt problems. So that's the first thing to point out. But where this piece came from is I saw a slightly unconventional wisdom, which was that if people need to borrow money or they're already in debt, then a loan is nearly always the best way to borrow money when compared to, say, a credit card. And the logic behind that statement was that people that they'd seen who had struggled most with debt had almost always started with credit card debt at some point. So as we all know, credit cards are incredibly easy to use, and the accessibility of that credit on those cards meant that they started buying more and more things, and they got themselves almost into a cycle of debt, which they were then trying to perhaps deal with. But because of the nature of it, where there aren't fixed repayments at a set level over a stated period of time, then people's behaviour surrounding credit card debt versus loans was very different. And I actually have some sympathy with that view. The logic being that people who had loans were therefore much more likely to be committed to paying them and actually getting rid of the debt in the long term. So from a point of view of people listening to this podcast, I think it's quite an interesting thought that they can self-reflect on them as a person, whether that would hold true. Would they be more committed to clearing a loan than they would do a credit card debt? I suppose the word is more disciplined. So there is a thought there for people who are pondering whether to take out a loan or credit card. So I just also want to just cover the pros and cons of each method of using credit cards for debt or a loan. Now, we all know how credit cards work, that you end up borrowing money on them and then you have to pay back at least the minimum amount that's specified each month. Now, one of the big pros of credit cards is that you can borrow money interest-free if you use things like 0% purchase credit cards and technically 0% balance transfer credit cards. And so if you are going to borrow money for a short period of time, maybe you're getting a payment bonus or something in the not too distant future, then you will be able to repay that debt. As long as you do it within the introductory offer period, then you could borrow money technically free of charge. Of course, with balance transfer credit cards, there is always usually a fee of 2 to 3% for actually moving debt onto that card. Another positive of credit card debt versus a loan is the flexibility that you can choose to pay how much you want as long as you're paying that minimum amount. And you can pay off the full amount without penalties. So you could decide to clear your credit card each month if you wanted, and there will be no charge for doing that. That is, of course, what you need to do if you are using a credit card religiously. Just use it as a cash flow. You clear it, and then some people like to collect the reward points, which I know you do, Andy, and get cash back every year. And of course, you have the Section 75 consumer protection if you buy something costing between £100 and £30,000. And obviously the cons are that you have to pay a minimum monthly amount. I mean, whether that's a con or not, that's the least you should be doing. Interest rates can be high, and that's particularly true if you've got a poor credit rating. So if you look at the average APR on a credit card, you're looking at somewhere between 18 and probably 21%, which is very high compared to a normal loan. Of course, the problem is it can take you a long time to clear credit card debt because of that flexibility. So people end up not paying back chunks of their debt, and they end up just paying the minimum. And if you do that, you're going to end up having debt for a long period of time. And if you go back and look at some of our YouTube videos, you'll see a YouTube video where I talk about a 19-year sandwich. So if you're interested in that, then do go and find that video where basically if you buy a sandwich on credit, you could be paying off in 19 years time. And of course, credit limits may vary and they might not be high enough for your requirements for trying to borrow money. Now, if we flip over to personal loans, then the advantages are you can usually borrow more than you can with a credit card. You can choose how long you want to pay the money back over, and you generally pay a much lower interest rate on a loan than you do with a credit card. So you might only pay something like 5%. Loan repayments will remain the same each month, which again is a positive because you're clearing back that debt in my view. And some providers do allow you to pay extra monthly payments with no charge on top, so you can pay back a bit quicker. Now, if you borrow small amounts, then interest rates can be a bit higher. So that's compared to what you might pay on a credit card if you've got less than, say, £3,000 on a loan. And if you pay off the loan early, you may have to pay a penalty charge, which can be the equivalent of 1 to 2 months interest. And typically the monthly repayments aren't that flexible. So you can see it's a case of horses for courses. Which one would be better for you? There isn't one answer to this. If you're going to borrow larger sums of money, then you will typically probably be better off using a loan than you will do an interest-free, say, purchase credit card if you can't pay it back within that introductory period. And given that the best deals out there are usually 2 years or less on introductory 0% purchase credit cards, then a loan would be better for people who need to pay it over a longer period of time. And of course, some people just like the ease of managing a loan compared to a credit card because the repayments are fixed at a monthly rate. And for budgeting, it can make it much easier to repay that debt. So to sum up, what you need to do is, before you take out either credit cards or a personal loan, if you need to borrow money, then you need to work out what you need the credit for. Is it a large purchase or something you can live without? Also, are you going to be able to repay it? How long is it likely to take you to repay the money? Can you afford the repayments of either a loan or a credit card? Do you know how much interest you're going to be charged on either option? Look at the APR. And don't forget that the advertised APRs, only 51% of customers have to get that. And that means 49% of people are usually offered a higher rate that you see advertised. And I would say, finally, make sure you know what fees you could be charged. So look at the T's and C's of a loan, for example, or even your credit card. Know what fees that you could potentially be charged for taking out that debt. So I have sympathy with that view that actually loans are pretty good to manage debt over a period of time because you have to repay them and you could even consolidate debt with them. And it might help people break the cycle of keep using credit cards, which can easily get into a cycle of accruing debt. But it's not as simple. There's not one size fits all.
Okay, and moving on to the last piece of the pod then, and Damien, you're going to be talking about the psychology of when you're purchasing these kind of products, financial or otherwise, and what are these companies trying to get you to do?
Now, this piece came about because of the Black Friday link, because Black Friday works along the similar line. A lot of it's marketing, as Jordan said earlier in the podcast. There aren't necessarily great deals once you start to dig beneath the surface. And there's a very good parallel with financial products. And given that we're often talking about financial products on this podcast, I think it's a very good takeaway from Black Friday to apply it to the wider world of finance. And it's something that I will always tend to do when I'm looking at products and services. So what you need to do is, whenever you get offered a product or service, it might be that you get something through the post from your bank, maybe from your credit card company offering you balance transfer deals, linking back to the last piece on the podcast talking about balance transfers. You have to think, what is the motivation of the people who are sending things to me? So typically they want to try and either grow their market share in the area that they're in, whatever the product might be. They may be trying to grow the number of customers that they have, or effectively just contacts. So people they could eventually sell more products to. And that's the other thing they might be just trying to do, is sell you more products than what you've already got. And the underlying aim is really to increase their potential future profits. And in tandem, they're also probably trying to reduce their costs. And you might be thinking, well, how are they doing that? By sending out marketing. But it's far cheaper to sell something and retain an existing customer than to acquire a new one. And it also is a reason why you get lots and lots of refer a friend deals. Nearly anything you have will have a refer a friend scheme going on with it. Even if the refer a friend seems quite generous, they might give you £100. That's because they've done the numbers and they know that it's going to cost them more to acquire that customer freely without your help. So actually they're getting a good deal when you do it. So you referring a friend, you're selling your friend down the river so they can be marketed to and potentially make more profits. So that's what they're after. And what they're trying to do in that instance is to try and get you to increase their customer base for them. But they also want you, when they send you things in the post, marketing or anything like that, is to probably act fast, act quickly. And they often have deadlines on certain deals. So they want you to do that because you're more likely to buy more, but you're also likely not to notice the things in the T's and C's that they've also put in there. So those caveats, those extra charges that are going to come into play. And they want you to also incorrectly assess your need for that product. So you might sit there and think, oh, actually, this would be quite useful to have this. And again, there's parallels with things like Black Friday where people buy things they don't need and didn't actually want, but the deal seems too good to be true almost, and then they go and buy something. Same thing with financial products. They also want you to forget when promotions end. So a good example is savings rates on banks where they might have an introductory offer of some kind and the rates go up. It could be an insurance product where the introductory offer on, say, your boiler cover may go up after 12 months because you've got an introductory offer for the first 12 months, but it then will increase. Some of these companies, what they really want to make money, they really want you to forget about those things and just keep paying because they know inertia is one of the biggest drivers of all their profits. And to be honest, most people are way too busy to look at anything when it comes to their finances. They make a decision, then they don't revisit it. And really, a tip is you should revisit nearly everything that you do in terms of like introductory offers, maybe savings rates, every 6 months, because they want you not to review it because then that's how they make their money. They don't make the money off you at the introduction. They make it over the long term. I want to give you some examples of things that maybe products that you might end up buying. And it's what they're trying to get you to do and are they betting on you doing. So, for example, packaged accounts where you pay a monthly fee for a range of benefits. Now, they want you to pay that and ultimately end up on a subscription. But what they're betting on is that you won't be bothered to buy the things separately, or you won't check whether you can actually get them cheaper separately elsewhere. And they also bank on the fact you won't use all the things on the package deal, meaning that it's even cheaper for the bank to provide the service. So those are reasons why packaged accounts got very bad names after a while. And I know there are some people out there who do benefit from packaged accounts because they do all of the opposite. They go and look and see, this is a good deal for me. Maybe the travel insurance actually works out well for them because of their age, for example. There are some people who have benefited from packaged accounts getting travel insurance because they're elderly, but they are covered under their packaged account. Or they actually do use all the benefits that the packaged account provides, and it means that they end up being, well, quids in. Credit card balance transfer offers are a good example. Now they want you to transfer a large balance across to them so you forget about it and you end up paying that expensive 2 to 3% fee, which if you've got a large balance, that's a large sum of money. They want you to do that. And they're hoping that you won't pay off the outstanding balance during the promotional period. So they're hoping that you will stay there and you will flip onto the really high APR over a period of time. And not only that, they're also hoping that you'll start to spend on that card because then you'll end up increasing that debt and they'll make more money from you in the future. Savings rate. So you might get a decent savings rate, interest rate on a bank account. And they are hoping that you will take out that account, but you'll forget to move once the bonus rate falls away. And they can then benefit from low cost funding, because they're paying you a low interest rate and they are therefore taking that money and using it elsewhere to be able to make more money, get a higher rate of return, and therefore make bigger profits. And they're banking on you not checking when that deal ends, not put a note in your diary. Now, another one which you'll see, which I'll close on, is mortgage deals. So often you will see a provider will want to renew your mortgage just before your existing deal comes to an end. And they'll obviously write to you, explain that your deal is going to come to an end as they should. But they're going to offer you another deal, but they're banking on you not looking around, not shopping around, because they know and they bank on the fact that you prefer convenience over shopping around and having to engage with a comparison site. And you're going to have to go through all the administration of getting onto a new deal. So they're hoping that they can make life easier for you by keeping you as a customer, but ultimately they're going to probably make more profit on you on the new deal. So they're banking on that. So the general rule is whenever you get an offer or you get some communication from a bank, financial product provider, or you engage with one, always think of what are they hoping that I'm going to do? What do they want me to do? So want me to take this product out now quickly. Why is that? Where is that catch? They don't want me to check the T's and C's for something in particular. What rate will I be paying? And I always think it pays to try and think like the providers themselves. How could I make as much money out of somebody like me with this product? What's the aim of it? Because let's be honest, none of these providers are doing this because they like you. None of them are doing it because they want to offer you a sort of fabulous product. They're doing it because they can make money out of you in the end of the day. So if you treat them with such cynicism, then you will tend to find that you will spot what it is they're trying to make you do. So I'll give you an example. For me, I've moved into a new house and I've taken out insurance on my boiler. Now, there's debates about whether that's good value or not. For me, because it's a house I'm unaware of, there could be lots of things that could be about to go wrong. So I've taken out insurance for a period of time to cover me for anything that should go wrong. I've had surveyors and everybody look at things, and touch wood, there shouldn't be anything untoward that would happen. But the offer that I got for that was very, very good because it was an introductory offer. Now, the company has 4 levels of service and they give you the top tier for the price of the second to bottom version, and it's on a good rate. And what they're banking on is in a year's time that I won't cancel or I won't review the cover that I have, and then it will renew. They will tell me, they don't have to write to me to tell me this, but they'll hope that I won't pay any attention because I'll get it via email, because I opted to get it via email, and I will then end up paying the top whack because I'm on the top level of insurance, and my premiums will go through the roof, and I just won't notice. I won't look at my direct debits. So that is what they're banking on. So what I'm doing is a complete counter to that. I'm actually sitting there and I've put in my diary an alert a month before it's due to end that I need to double check what's going to happen with this insurance, because I might want to try and cancel it and look at what type of notice I have to give them. So that's what they're trying to get me to do. Sign up to an expensive deal by giving me a great introductory offer. So I'm trying to counter that by thinking like they do.
Okay, so that's it. We're done for this week. If you want to get in touch with Damien, you can do so. It's Damien at moneytothemasses.com. Twitter, it's at moneytothemasses for the number 2. And of course, don't forget to check out Instagram, especially over this Black Friday, Cyber Monday period. All of the deals will be going up on our socials. And if you are one of the early people to download the podcast on the Friday, Jordan will be updating the deals on the Money to the Masses website and the socials live. So you can always drop us a message on the socials, say hi and be a part of the madness. Damien, I think that's it. We're done for this week, aren't we?
Yeah, that's it. We're done. Until next time.
Until next time.